It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another Real Estate Podcast, your largest real estate podcast library in Australia, as we talk property from Hervey Bay to Adelaide and every city in between. Yes, you can stream us right now on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts and Amazon. And don't forget to tell a friend who might be into real estate just like you about the Real Estate Breakfast. It is a Saturday morning, weekend time. It has arrived. March the 1st as well. We've dispatched February. Boy, that went by lightning fast. And more homes hit the market last year than the year before. Some interesting statistics here. In 2024, new property listings were up by 7.9% compared to 2023, marking it the busiest year for new listings since 2021, and before that, the highest since 2017. Now, the data suggests strong listing activity has been fueled by positive market conditions, and it's mirroring levels last seen back in 2018, alongside an uptick in sales from pandemic-era buyers. Now, the main driver, unexpectedly large equity gains from rising property prices. And as owner-occupiers hit the ground running for this year in 2025, average loan sizes are on the rise nationwide, with the typical Australian mortgage reaching a record $666,000 by the end of last year. And with a growing housing market, the larger loan commitments, how are new buyers managing to break into the market and handle their mortgages? Well, we're going to break this down once again with our expert insights from Anthony Landau, the mortgage broker at Equilibria Finance. Good morning to you, Anthony. I guess we should kick it off first by looking at different states, different loan sizes across the country.
Yeah, good morning, Craig. Nice to be here. There's some mouth-watering growth over the last 10 years nationally. For example, in New South Wales, the average loan size is now over $800,000. That's grown over 100% in the last 10 years. If you put that into dollars and cents, the average household in New South Wales is paying close to $5,000 a month on their mortgage repayments. Victoria, Queensland, Western Australia, their average loan sizes are sitting between $600,000 and $650,000. They've grown from around about $400,000 10 years ago. And even in some of the, I guess, more affordable states like Northern Territory, Tasmania, the Northern Territory's average loan size is now in and around over $400,000. There's been some growth over the last 10 years of between 50 and 100% state by state in terms of average loan sizes. And as I said, in New South Wales, the average repayments are now $5,000 a month.
Yeah, and for those trying to enter the market, having clicked into 2025, it's not getting any easier. Yes, we've had one of those rate cuts. That's very nice when that happens, but it's going to take some time for people really to feel a bit of a balance, a bit of an equilibrium running across the market. It's always nice to talk strategies. So when you're talking to your clients, particularly those buyers, what strategies can buyers use to save faster or reduce the deposit required? It's a big question.
Massive question, and probably one of the biggest challenges for new home buyers, for those trying to upgrade, is the sheer size of the deposit. Median house prices in New South Wales are $1.5 million, the best part of. An 80% loan to value ratio means you need a deposit of $300,000 plus coverage for stamp duty. So they're big numbers to be looking at. There are some strategies we help our clients with around deposits. One of the big part of it is there are some lenders where you don't need a 20% deposit. You can borrow up to 95% in some cases. You will require lender's mortgage insurance, which is a cost. But if you've got strong serviceability, if you've got strong income streams, sometimes that strategy can make sense For first home buyers, there's what's called home guarantor loans, where you can utilise a family member like a mum and dad's property as a security to essentially bring the overall value of the security down so you can borrow more without paying lender's mortgage insurance. Of course, you've got to service the loan. Some people are now looking at buying with friends or partners to share the burden. There's also some government schemes like the home guarantee schemes that the federal government's put in place where if you meet criteria, you only need a 5% deposit. And a lot of the time we're putting people and helping them with budgetings and savings plans to work towards what they need to achieve with a deposit. It's a big challenge. Have a chat to your broker about some of the things that can help, some of the programs that are trying to help people with their deposit.
Yeah, because many home buyers, of course, they are borrowing the maximum, as you mentioned. That is a huge burden to take on just to secure a property. And just a couple of days ago, spoke to Nicola Powell from Domain. She was saying not only is it about getting the deposit, managing to climb that hill, but also keeping on top of those repayments.
It's about timing the purchase when it's right for your own personal circumstances. I think the worst scenario that you could potentially be in is losing your job and then defaulting on those mortgage repayments. And, there's two ways to look at affordability. It's not only saving a deposit, but it's also the ongoing repayments that you need to be able to make.
Yes, it's all about exactly that. It's keeping on top of how much money you're actually paying across every month. So what advice do you give clients on managing their mortgage effectively once they've got one?
Yeah, it's a really important issue that can often be overlooked. You move into your new house and all the excitement of that. The sort of guidance we give is firstly understand your budget. You've got your loan, you've been able to afford your loan, you've passed the criteria for the provider, but set your budget. Make sure you understand what your monthly repayments exactly are and manage your budget around all of your other expenses, your monthly mortgage repayments, your groceries, your household expenses. Understand when your repayments are. You'd be surprised how many people miss a repayment, don't have their direct debit set up properly. There's some really strong ways people can save on interest. If you pay fortnightly instead of monthly, and if we go back to that example of the average loan size in New South Wales being $811,000, if you pay fortnightly over the life of the loan, you will save $740,000 in interest by making more regular repayments on a variable rate home loan. So if your pay cycle means you can pay fortnightly instead of monthly, you're going to save a lot of interest. A couple of other tips: if you can pay an extra $100 a fortnight or $100 a month, make those repayments. It'll lower the overall amount of interest you pay. It'll sit in redraw. So if for some reason you have a situation where you need some cash, it'll still be available in redraw. Pay more than the minimum if you are able to. And also set up an offset account's a good tip as well if you can. Put your savings in offset because it will offset the amount of interest you're paying. So if your mortgage is $800,000 and you've got $100,000 in interest, you'll make the same repayments, but you'll only pay interest on the $700,000, which again will save you interest over the life of the loan and save you time in terms of the loan repayments.
And in terms of the banks doing this whole stress testing, make sure that you stress test yourself. I think there's just so much of a concentration to get the loan without looking at your financial situation long term. So stress test yourself. It's a great idea. And just in terms of the first rate cut that we talked about, have all the lenders passed that on?
Yeah, look, the first rate cuts brought some relief and effectively all the lenders are passing this through. They're going to be effective as of the end of February and early into March. There's still a few of the second tier lenders, if you like, who are making the announcement. One thing to be aware of is not every provider will automatically apply that rate cut. There are some providers that you as an individual, as a client, will need to contact if you want your repayments lowered. There are some cases where the rate cut will be applied, your repayments will remain the same, so the effect of that will be you'll be paying more of your loan off. But check with your provider. Some of the providers will automatically apply the rate cut. Some of the providers won't automatically provide the rate cut. So we're letting our clients know who's doing what and how to contact their providers. So just a tip, providers are passing on the rate cuts. Just check if yours will automatically apply it to your loan.
All right. Well, thank you for that, Anthony. It's all part of our Saturday, looking at your mortgage and just how much these days it is costing you. Go well, enjoy your weekend, and talk again soon.
Looking forward to it. Thanks very much, Craig. Have a great weekend, everyone.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
You field as a CEO, as somebody prior to becoming a CEO, you field all those questions from people saying, what is it really like working in the real estate industry? You know, can you make all this money that people talk about? How do you sort of curb some of that enthusiasm around the money with the reality? What do you sort of typically talk to people about when they make that inquiry to you?
I think real estate has incredible opportunities, but I think that there is a misconception about how quickly or potentially easily people can get to that top percentile of agents operating. The majority of agents, it takes them a lot longer than I think what they anticipate to get their momentum going. So you've got to learn the right habits. You've got to set yourself up correctly from the beginning if you're going into sales. And then you've got to build, a digital footprint. You've got to get to know the community. You've got to learn how to transact and negotiate. So there's quite a lead time. And the ones who do exceptionally well, I guess I don't want to say less common, but there are quite a few who don't quite get to where they think it's going to be. I think it looks quite glamorous from the outside. It's a bit harder than I think what it looks like for those coming in.
When it comes to sales, you can never, ever pick who is going to make a great salesperson. It's the most unlikeliest of person. Sometimes they come through and you go, wow, where did that come from? I did not see that coming.
Yeah, and I think the consumer has changed. I think that now what they really want is someone who's authentic, who they can find easily, but someone who they can really relate to and who can demonstrate how they're going to get a better result for them. So I think it went through a stage where it was all about digital, but I think it's really coming back to that necessity to have the balance of being able to interact with people, sit down around the table, the old school real estate supported by the new way of the digital technology there.
Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions.
Good morning to you, Matthew. A little bit of good news in your corner. You were voted on to Pippa, so congratulations. Well done.
Thanks, Craig. Yeah, it's a very exciting opportunity for me to join the board of Pippa, which is the Property Investment Professionals of Australia, for anyone who's unaware of them, and join some of the top practitioners in the industry and help them advocate for higher standards in the industry, support investor education, and get people access to qualified independent advice. And it was a very productive day, and I'm looking forward to what we can achieve this year together.
How big is the organisation, just for those listening this morning?
There's hundreds of members across the country, and it's one of the longest standing organisations in the country as well. And all the members adhere to a strict code of conduct. And it's not, I'm also a member of REBA, which is the Real Estate Buyers Agency Association of Australia. That's specifically for buyers agents, whereas Pippa extends to other advisors, finance and mortgage brokers, accountants, anyone in that space.
We connect you to the best real estate information across Australia. The Real Estate Podcast.